Well, I think we're live online here at live in Cheltenham. Lockdown, of course, in about fifth, sixth, seventh, eighth, 10th week. I can't remember. We're in lockdown now. In fact, one day becomes like another, doesn't it? Welcome to your mortgage live stream. Hope everybody is well. Got some great ideas for you to help you in the mortgage world, financial services world, whatever world you find yourself in. I'm Paul Archer, by the way. You can talk to me at paularcher.com if you want to email me. Advisorcpd.com is the website. And enough of that. Let's get on with things that have been going on in our world in the last week or so. Now, the point about the mortgage market is there's no new news. In fact, if you look at the news, there's no new news. The BBC News comes along, it's some terrible predictions, of course, it goes on, then it's all opinions, and there's usually a conspiracy. There's no new news, and in the mortgage world, it's exactly that. We've been locked down, of course. A lot of people in the sector have been furloughed until the end of June, most of them as well. So the whole industry has come to a grinding halt. The housing market is also on lockdown. The big spring boost, the Easter boost that normally gives the housing market a little sort of a bedoing, has not happened at all, obviously, because no one's viewing houses unless they're online and looking at Rightmove. But there are innovations in the mortgage market that you need to be aware of if you're already as a broker or you're a budding broker as well. Now, the big thing, of course, is that lenders or high street banks and builders have got some cheap money to lend. The government are giving them some cheap dosh, and they can lend this as much as possible. But the only problem they've got, of course, is valuations. Valuations require somebody, a person, to go to a house and value the property. But desktop valuations are something that a lot of lenders are taking on board. Now, desktop valuation is where somebody, a surveyor, valuer, values a property by looking at a computer model, some sort of system which looks at the house price, the land registry database, whatever it is, and they do a desktop valuation based upon a computer model. They might do a drive-by, which sounds like a shooting from 1920s, isn't it? A drive-by valuation where they drive past, but even that's not allowed really, because that's not an essential piece of work in the current lockdown environment. So there are some problems at the moment with valuations, but if you can do a desktop valuation, then you can certainly do a remortgage for clients, because remortgages are hugely popular at the moment. I read a story of a broker who saved their customers £600 a month on a remortgage. I mean, that's pretty good, isn't it? Obviously, every penny counts at the moment with the lockdown, and people's employment positions are very much in jeopardy. So £600 a month savings, a massive savings. So think about remortgages if you're in the broker world, but make sure, of course, that you can process the mortgage application with a desktop valuation. There's a lot going on in protection as well. A lot of customers or clients are rethinking their thoughts around protection. Good brokers now are going back to their database, people that arranged mortgages for the last year, 2, 3 years, and reigniting the protection conversation, because people are thinking about this again now, aren't they? Protection becomes a #1 priority. So therefore, they're selling those. Now, I'm applying for some life assurance, and I have to go to a medical because of my age. And of course, that grinds to a halt, that application, because I can't go to a medical. Okay, they can write to the doctor, but the doctor's got more important things to deal with than responding to insurance companies, as you can probably appreciate. So a few things there you need to be aware of as they go along. But there's new products coming on board now. A lot of the specialist lenders took away their products initially. Now they're introducing some new products and better products to keep the mortgage market bubbling along a little bit. But what about the future then? Let's just take a look at what's going to happen in the future. Let's talk about that for the rest of our time this morning. So what's the forecast? Who knows what's going to happen to the sector, to the financial services sector, to the whole economy when we come out of lockdown? Now, there's a lot of people talking about V, W and U. You may have come across these. Let's put these up on the board for you. A V, a W, and a U, of course, are letters of the alphabet. We know that. But there are also indications as to what might happen to the economy or the recession or the downturn, call it what you like. Because social distancing is there to stay. Social distancing isn't going to go away for a long while, even when we come out of lockdown. So what's going to happen to the economy? Well, first of all, you can have a V-shaped recovery. Now, the whole point about the V-shape is it indicates how the growth or the fall in GDP occurs over the period. So, for example, right now, GDP is rocketing downwards. It's plunging by 10, 15, 20% plunge in gross domestic product because nothing's happening in the economy. As soon as we come out of lockdown, we're going to bounce back and we'll have this V-shaped recovery. So, we've really come down in Q2. Q3, Q4, bang, back up again to what it was before. That's one prediction of what might occur. The W is a bit of a pessimist one. This is where you have a plunge in GDP, but then you have a little pickup, but then things get bad again, and you have another plunge, and then you have another pickup. It's called a W recession. I don't know whether that's happening or not. But the U one is more than likely what will happen. The U-shaped is a sudden plunge in the GDP, we can see that. But then it's a period of uncertainty where not an awful lot goes on, but then suddenly things start to pick up again. I think that will probably what will happen. Q4, Q1 of 2021 is probably where things will pick up again once we get used to the new environment we're in. So what's the market predictions? Well, who knows really, but there'll be a long period of lockdown or social distancing. That'll take us way into the autumn. Think about it, a lot of people on furloughing are being furloughed now to the end of June. My partner's on furlough, but she got a letter through from her people saying that once they come out of furloughing, they want them to take their holiday entitlement. So you probably find August time, everyone's taking their holiday, who's employed, of course, on furlough. So of course, things won't pick up then until the autumn. I think digital is here to stay. Talk about that more shortly for you. Less competition in the specialist mortgage world. I think we'll see a few mergers going on in the specialist mortgage world. They're having trouble at the moment. They're having problems with financing. The cost of credit's going up, of course. So you'll see a few more mergers there going on as well. All those companies that operate manual underwriting will win, I think, in the future. If you think about it, if you're applying for a mortgage and it's a computer says yes, computer says no situation, somebody who's been furloughed, maybe self-employed, income's come down, and automatic sort of underwriting will say no. But if somebody does manual underwriting, they can take a look at the situation, look at the career, the prospects, and they can make a conscious decision about it. I think that's a good thing as well. What else is going to happen? I think cash flow will become important. We'll talk about that more in a second or two. I think there'll be more vulnerable clients to deal with under the FCA. You have to deal with vulnerable clients. Vulnerable clients require extra special attention and effort. I think there'll be more of those people moving forward. There's bound to be. Financial, health, all those issues coming in. I think a lot of companies will change more to the digital space. They'll automate things. And the legal profession really does need to get their act together when it comes to automating the legal side of purchasing property. At the moment, they're dragging their heels a little bit. So lots going on, I think, in the marketplace. Lots happening for you, lots of news. We're waiting for things to pan out. Okay, let's take a look then at the downturn and my 10 predictions for you. So I'm going to talk about these now for you. I've got 10 must-haves that mortgage brokers, financial advisors must do in order to persevere in the current marketplace. So these are my 10 must-dos. Let's talk about the 10 must-dos for brokers. Let's put it up there for you. The 10 must-dos. Now, I've been through a number of downturns in my career, and I understand what happens when they happen. This is obviously a very unique one, but it's not that different at the end of the day. Economies are economies. So these are things that you will want to seriously think about. Have a look at all 10, see what you think. Take a few on, maybe one or two, maybe take all 10, it's entirely up to you. What's the first thing we must do then? Well, the first thing, number one, is to focus on what you can influence. At the moment, of course, people are running around, literally, anxiety, panic, all those things. People don't really know what's going to go on or what they need to do. So people are panicking. Now, what we want to do is focus on what you can influence. At the end of the day, there's only 4 or 5 things you can influence. There's making sure people around you are protected, your loved ones, you have connections with people. Make sure that you can influence your bills, so pay a few bills if you have to. Have some money to come in to pay the bills. Have some security, some safety, have a house or some sort of base where you put yourself as a sort of a protection mechanism. That's an important area for you. Focus on only what you can focus on, what you can influence is the key situation there when it comes to it. So that's the first thing for you, focus on that. Number 2 for you is the Cash Flow Preservation Society. Now, one of my favourite albums is the bands of the Kings, and they talk about the Village Green Preservation Society. I call it the Cash Flow Preservation Society. And what we do here is we think about cash flow. Cash is king. In a downturn, cash is what keeps businesses afloat. And what I'm recommending you do now is you preserve your cash. Think about cash in the bank, not pounds, shillings and pence, but money in the bank that's liquid for you to use to operate your business, because things may get worse, they may get better. So think about how you can preserve cash. Obviously, cut back on your unnecessary expenditure. Defer your VAT, defer your tax bill if you can as well. Look at all the government incentives there, furloughing people possibly, the self-employed money that you can get as well. So preserve your cash as much as possible. Think cash flow preservation society. It's the second rule for you. Number 3 for you, and we'll get away from the doom and gloom, shall we? Number 3 is to ring fence your clients. There you go, ring fence your clients. And what I mean by this, I mean literally covet your potential clients or your client base that you've got. Ring fence them, contact them, tell them that you're available, you're there to help, do what you can, offer them something if it might help them to do what they do. But at least just contact them so that they don't get contacted by other people. Other people will start to do more prospecting. We'll talk about in a second. You need to ring fence your clients, make them aware of what you do, what you're available to do, how you're operating, how you can help them. Make sure that you offer them whatever it is you can do to assist them, ring fence them, contact them, covet them as much as possible. That's number 3 for you. Number 4 is when you're dealing with your clients now and in the future, eliminate all risk. Now, in an economic downturn, people get very risk averse. They worry about risk. So what you need to do in an economic downturn is to make sure that when you provide a service or product, that you eliminate the risk as much as possible. So make sure they're aware of your track record and your capability and your experiences. If you can, offer them some kind of guarantee to help them to eliminate risk. People get very risk, the lens comes out in an economic downturn. People get very risk averse, so eliminate risk for clients. Number 5, I've talked about this many times before, is diversify or die. It's a bit dramatic, that one, isn't it? Graphic, that one. Diversify or die. But think about your position. Think about what you do. Think about what your main reason to be is. Now, if you're a mortgage broker, you might well arrange mortgages for people. That's what you do. But I think you're more than that. If you're a mortgage advisor, what you do is you help people to buy property, either to rent or to keep to live in. You help people buy property, you help them to finance it in the right way, to arrange finance that is appropriate for their needs, that isn't going to be scuppered by death or illness or a hazard like fire or flood, so they can keep their house, keep their family protected. You do more than just arrange mortgages. Think about what your reason is. When you start looking at that, then you start looking at diversification. So you should look at things like protection. You should look at things like wills, trusts, powers of attorney. You should look at things like income protection, life assurance. You should look at mortgage arranging, of course, maybe the later life market. Possibly even look at becoming more of an IFA, maybe. Look at wealth management, some other kind of area. Look at diversifying your business anyway. Because if you want to survive the downturn, you've got to be able to look at different streams of income that come in different ways and wrap it around the house purchase market, wrap it around the mortgage market. You've got this privilege of fact-finding clients. Make sure you can handle all the needs that spring up from that fact-find. Even if you have to refer people on to specialists in that area, but if you can deal with it yourself, do so. Take the opportunity of improving your qualifications to become level 4 qualified, maybe becoming an IFA or in the equity release market. Make sure that you're able to offer this service, because when you diversify, you start to expand your business model as well. Number 6, keep an eye on the mortgage market. Keep a close eye on the mortgage market, what's going on there. Know what's happening, know what lenders are available, know what the specialist lenders are doing. Understand about valuations in the downturn, whether things change or improve. Keep an eye on the mortgage world, know what's going on, know what the vanilla lenders are doing, the bank lenders are doing, the building societies, know what the competition's doing as well. So keep reading, keep active in the mortgage world itself. Number 7 is to rethink your operating model. Yeah, number 7, rethink your operating model. Now, I was reading in the press at the weekend about some firms that provide office space. There's a couple of WeWork, I think. They provide office space. Now, those firms are not doing so well because the need for office space, of course, is going. Now, we've all been told to work from home if you can. Some industries can't, I know that. But the vast majority of mortgage advisors, mortgage brokers, financial advisors can and do work from home. Do we need office space? Does your business model require physical office moving forward? Rethink it now. Plan for it. Can you go totally virtual? Can you have a hybrid model where some of it's virtual, some of it's office space? People are getting used to this kind of stuff now, you know, the Zoom type of operation, fact finding via video. As things improve with virtual reality, it'll get better and better. So have a look at your operating model. If you can cut your costs by getting rid of office space, then do. You don't need it. Gone are days where you need a plush office with Chesterfield sofas with receptionists to greet you, with a meeting room available to talk to somebody. You don't need that. You can move into a much more lighter operating model. So that's number 7 for you. Pretty good one, that one. Now, number 8 is my favourite here, and this one I've called Prospect Like It's 1999. I don't know where that came from. It was a song, I think, wasn't it? And 99 was a big year. There's obviously the century end, doesn't it? But prospect. You've got to sort of get really good at prospecting from now on. Gone are the days where you'll just get loads of people contact you. You've got to get off your butt and get out there and find some business. So get good at prospecting, get good at personal marketing, get good at online marketing, digital marketing, inbound marketing. Get good at Facebook advertising, for example. It's not expensive. It's something you consider doing. Get good at buying leads from the internet and contacting those leads and making the first appointment via video, whatever it is. Get good at prospecting. Start up and keep a referral management system going. Don't just accept referrals when they happen organically. Get a model going where you automatically ask for referrals, using a system, using the proper model as well. You've got to be specializing in prospecting. It's hard work now. There's not the same amount of business going around to so many people. You've got to work hard at getting new business, new prospects, referrals. Referrals are king, of course, but look at other ways of getting some new business as well. 2 last ones for you. Number 9 is look at your model, your business model, and focus on what AI can do as well. Now, this is the chance for artificial intelligence to move into our sector. So be very careful. AI is advancing all the time, and AI will certainly move into the mortgage financial sector as people leave it, as costs become important, as prop fees come down. Artificial intelligent models will come in. People will want to automatically get their mortgage without seeing a broker. So look at that. Look at how you can evolve your own model around that, because that will be your competition. Diversifying is one thing, but being able to operate and offering clients additional value. Think about how you can add that value. Think about what artificial intelligence does, yeah. Think about what a human can do, which overcomes that. Work alongside AI. Make sure you've got your own app. Make sure you've got some kind of fact find system which the client can complete themselves online, and that submits information to you. Make sure you get your sourcing models automated as well, so you can source the right mortgage quickly and easily. Use AI yourself to complement your own work, but then have a sort of people connection where it's necessary to do so. Think about your client base. Maybe you want to move away from the younger people, more to the older model where they don't perhaps want AI to deal with their mortgage, more of the latter life market. But bear in mind, the competition in the future will be AI more than any before, and therefore we need to compete against that as well. Number 10 for you, last final must-have for you, and this is something to think about. Number 10 is have goals. Yes, of course, have some goals, but now is the time for tactics. Now is the time for flexibility. Have your 5-year goal, your 10-year goal, and have all that. Of course, you should do that. But now you need to be thinking about your tactics, your less strategy, possibly more tactical. Tactical is more to-dos, more action plans, more sort of flexible operating methods. You will need to be a fleet of foot moving forward. You need to be able to change quickly, see what happens to the marketplace as things happen and things change. More tactics than strategy, big golden goals is the key to it now. And be prepared to change it. Have your Q1, Q2 objectives, be prepared to change those, to adapt. If you're small and agile, then you can move and adapt to the marketplace as it changes, as it gives you more opportunities as you move forward. So they're the 10 must-dos for brokers. A couple of hard-hitting ones there. The cash flow one is key. Don't forget that. Cash for, if you've got a brokerage and you've got outgoings and costs, etc., think about your cash flow very carefully, because that's what will make the difference for you as well. Ring fencing your clients, absolutely vital. Make sure they know that you're there. Selling to existing clients is so much easier than getting new clients, of course it is. Don't forget your operating model and diversification. That is key to what's happening here. Think about where else you can obtain income from. Protection is a key one, of course it is. Everyone's thinking about that right now, aren't they? Wills, trusts, powers of attorney, all those things. Maybe moving into an IFA, later life market. Later life market, as I talked about before, is immune to recession, because it is, because these people aren't actually working anymore as well. And think about tactics. So be aware that you know, the downturn's there. The market has changed and will change. It's not going to go back to the way it was. We're not suddenly going to be like it was in Q4 of 2019. The world has changed. People have changed with it. So there's 10 must-haves for all brokers to take on board. I think that useful. Bye. Okay, so that's a wrap. I think we're 21 minutes into our live stream. Hope you found it useful for you. Remember, if you want to get onto the bootcamp, get your CeMAPs out of the way, we've got online here for you with Zoom capabilities, coaching, all those good things. Nothing to do with a classroom anymore. You can get details from the website archertraining.com. You can email me, Paul Archer, paul@paularcher.com if you wish to. YouTube channel's got details as well, so you can get online there and get access to our cohort. Our next cohort starts on the 4th of May. Got 25 people coming onto that one. Got about 18 spaces left, so you can contact me if you want to come onto that. Get through your CeMAP by the end of the summer. So by the time this all comes clear, you'll be fully qualified and moving forward, and hopefully looking at all these different angles for you, because I'll keep you posted on all these changes that are going on as well. So that's the plug for you. Do get to enjoy some fresh air if you can. Do get out there, think positive. Let's do what we can do in this crazy world that we're in. Hey, I'm paul@paularcher.com. We'll see you next week. Bye.